Welcome to the Global Pulse, a short video series where our experts break down a trending topic in international business and why it matters to you.
Greetings. In this video, I'm going to talk about global currency markets and Indian rupee in particular. After being one of the best performing currencies in 2023, Indian rupee is losing some ground against dollar over last 3 to 4 weeks. Now it is trading at 83.50 against dollar. So that means a loss of almost a 1% of its value against dollar over last 3 to 4 weeks. So what is happening in India that's causing INR to fall so dramatically against US dollar? Let's look at some of the usual suspects. Inflation. Inflation seems under control, roughly 4 to 5%, depending upon how you measure it. Imports are not growing dramatically. Current account deficit is, in fact, at its lowest of 1.2% of India's GDP, aided by strong services and software exports and strong remittances from Indians working abroad who are sending money back to India. Foreign investors are believing in Indian story. Indian economy just grew at 8% last quarter, and they are investing in India at a very high rate. In fact, they just invested $7 billion in Indian financial markets just in March when Indian rupee was falling. So some of the usual suspects do not seem to explain what's causing Indian rupee to fall. So let's look around more broadly what's happening in the global currency markets. And if you look around, you see that dollar index, US dollar index, which measures strength of dollars against basket of currencies, has gone up by roughly 2% over last 3 to 4 weeks. And that includes resurgence of dollar against euro by 2%, against British pounds by 2.5% almost, and many other emerging market currencies, Turkish lira, for example, 3.5%, Thailand baht 3.5%, Japanese yen 3.5%, and some Latin American economies even. And so the rise of USD is ubiquitous. It's not just that INR is falling. It's not an isolated episode, but most other currencies are falling against dollar. And it seems like a global story that's behind the fall of INR and other currencies. So let's try to understand what's happening. And one variable that can explain all this is interest rates. In the US, the economy is growing strongly, unexpectedly so. Labor market, manufacturing, all the sectors look in a strong position. And that means that the Fed is not ready to cut the rates just as yet to support the economy. And this is aided by the fact that inflation is falling, but not yet there at 2%. So that puts Fed in a situation to hold on the rates. And that means interest rates in the US will stay higher for longer. But that was not the expectation even 2 months back when market was expecting almost a 1 percentage point decline in interest rates. And this development over last couple of weeks, 3 weeks, mean that the US has just become a better attractive investment destination for most money managers, leading to rise of US dollar. And this comes at a time when other central banks are actually cutting the interest rates. For example, Swiss National Bank cut the interest rates last month. ECB is on track to cut the interest rates in June, and so on and so forth. Japan increased its interest rate, but not enough to the liking of the market. And this puts US in a very strong position, and therefore US dollar in a very strong position in terms of where the money is going to flow over the next few months. And therefore, we understand the fall in INR as a part of the global story rather than just an isolated episode. In fact, INR has done well to lose just 1% when other currencies have lost 2 or 3% over the last 1 month. And this is mostly due to the fact that Indian economy is in a very strong position right now compared to many other emerging markets. Thank you.